All right, good morning, everybody. It's Sunday, 11 a.m., August 2nd. My name is Amol. I also have Faisal on the call with me. He is our equities analyst. He does a ton of analysis and research for us in the alpha trade side right here. So whenever you do see him in here, you can pop in and say hi. You can pop into the stock market chat, ask any questions that you have, or you can look at Faisal's stock alerts, stock of the day, or top growth stocks that he is trading actively or passively. So with that being said, let's get started with today's Sunday equities video. Faisal, what's going on?
Not much, man. How are you doing?
Good, good. Friday we got to cover what pretty much happened in the previous week in the market. Um, Over the weekend, I'm sure you did a little bit of research. So, what's on your mind for the week ahead? What are your thoughts on the market?
Well, if you saw the video Friday, you'd probably guess that I was pretty nervous because I had just shorted tech. I was selling a lot of my longs. I was really in the middle of raising cash like the entire Friday. It was a very busy day for me. And I really didn't like what I was seeing because you had stocks like Microsoft and a lot of the high growth leaders. Coop was also down initially off a day when you should really have tremendous performances in the tech sector because of how the leadership was. You had Amazon that was up 5, 6, 7% to open up. Facebook was up a ton. Apple was up a ton. So you had a lot of the leadership do very well. I think Google closed down. Google was the only one. I even mentioned it in my note Thursday night when I looked over the earnings reports that Google was just the one name that I wanted to stay away from, and I'm really not surprised that it was the only one to close down. But we'll probably get into that more later. But I'm actually feeling kind of good about my short, and I don't think we're out of the woods yet in terms of the market coming down, or even I think we could see a tech pullback at least. I don't think we're out of the woods as of yet, and I think I may end up upping my short position Monday or latest Tuesday. I think by late Tuesday, we will know what direction the market wants to go, or definitely what direction tech wants to go, because there are a couple of interesting things that have happened in the tech sector as far as the earnings revisions are concerned, because things are actually not as peachy for 2021 as I think the stock prices reflect. And I think that could end up leading to a lot more turbulence over the next quarter or even the next 2 quarters as in my opinion, from some of the leaders that I've seen, Coop, Zscaler, both leaders in software and cybersecurity, their estimates have actually come down, and they're expected to regress earnings in 2021, broadly speaking. So I think you'll see a lot more of that from a lot of these software companies that saw this type of demand compression in this quarter as companies opted to build out their more remote work jobs and just become more technologically advanced and integrated from communications and security and everything like that. The growth that was supposed to happen in 2 to 3, 4 years ended up happening in 1 to 2 quarters. So once you have that type of compression demand, it's normal to see that fall off. But the demand that we saw, like you see why these stock prices went up, like Coop went up 400%. A lot of these software stocks ended up going up triple digits, almost all of them. And that's directly related to the compression that I was just talking about. So the drawdown, I think, will create some turbulence, at least over the short term. And we may have hit a top on these stocks if we do see enough price breakdown, because I just cannot see these stocks going forward, especially in the tech sector, if earnings are going to come down next year.
Yeah, those are solid points. Let me unpack that a little bit. So, I think at present moment, you're saying that tech and specifically software you think are a bit overextended, and currently you're in some short positions. Could you actually talk a little bit about some of your shorts that you have?
Yeah. So you're looking at one now. Coop has been the leader of mine for so long, but I really never feel comfortable with shorting a stock like this because look what it's done.
Right.
But the expectations, I think, have gotten way ahead of themselves, and now they're right in front of your face, and no one's really seeming to care. And I think people will start to care once the stock price comes down. So I'm waiting for that type of event, and I'm sure once the price comes down, people will talk about how there's going to be regression in 2021 for a lot of these companies, not just Coop. I think Coop is just one of the few that's indicating in the estimates right now. And I'm also just short XLK. You know, I shorted it at like 108.18. It's really ran up quite a bit as Apple and all these other dudes recovered towards the end. But you know, I'm still not ready to cover. I think, like I said, by late Tuesday, that's when we're going to figure out the direction of the market, especially tech, whether or not it wants to pull down. And you know, as for the other sectors, you all know that I was in a lot of value. I actually ended up getting out of a lot of value on Friday just to raise some cash. Um, I don't want to believe that it's over for them, because the earnings revision, especially in the healthcare sector, which I don't consider a value sector, but they definitely have various value industries, whether it's the pharmaceutical industry, and still think the biotech industry is trading way too low relative to the highs, and just how important innovation is in that space. I think you're going to continue to see demand in that space. But I think for those value sectors, I think late Tuesday, we may see some type of movement. Now, I'm not ruling out that if tech pulls back, value sectors will also pull back, because that they just haven't shown any strength at all whatsoever. So I'm a bit skeptical, but I'm still in some value names. I'm mostly in value names. I don't know if I have any tech positions really right now. So you know, that's just how I'm seeing the market. That's how I'm playing the market. But I have no problem getting out of value if I start to see the signs break down. Probably late Monday, and then late Tuesday is just the last call.
Gotcha. I think you and I have somewhat of a similar style when it comes to the stock market of, you know, covering positions if the position runs against you. Can you actually detail some of your thought process of, you know, when you were talking about if you don't see strength or weakness in that particular stock that you're shorting by Tuesday? First of all, why Tuesday? And, you know, what are some of your typical cover parameters that you have, say, as rules or disciplines, you know, when you are entering or thinking about exiting positions?
Yeah, that's a great question. So this quarter has definitely been one where I have had to be very flexible as far as technical parameters, because I think it's not so much been about the individual stocks technicals, more so about the strength and momentum of the entire sector. So you have to get an overall picture of the industry, whether it's looking at the ETF or multiple technicals of multiple stocks or leaders within that industry. And a lot of times your stock may end up getting crushed, but the leaders are holding up fine. And in my opinion, that's enough reason, as long as the estimates are still good. There's no significant news on the stock. That's enough to, you know, either want me to buy more at the next support level, or, you know, hold on to the stock. So technically, like, my technical parameters have been very, very flexible this quarter, just because of how volatility can be. I'm not a guy that uses stops, because, like I said, volatility in the stock market, it'll get you cut out. Like, you
Yeah.
will get stopped out at the wrong times. It's all about the closing prices for the most part. That's usually what I pay attention to. And that's why I say, you know, by late Tuesday, we should have some good indication as where we want to go. Because if Monday we close right and tech ends up making a higher high, and probably an all-time high at that, that'll probably be Tuesday. If it's closing well, that's when I'm just going to, you know, say, okay, it's totally confirmed. This market's going up, because the S&P has not hit an all-time high. It's very reasonable to assume that tech could continue to lead, especially if the broad market wants to play catch-up. I still think that, you know, by late Tuesday, you'll start to see something with the value sectors too. They showed terrible stuff on Friday, but towards the end, it didn't get that bad. You know, initially, a lot of my leaders ended up closing below key levels, so we'll see what happens Monday. But, you know, I'll give it 2 days for everything to sort itself out, because of how volatility is.
Yeah.
But just how that touches on how I'm trying to react to my positions, because, you know, I have some pretty bad positions right now in Boeing, 3M. Those positions are past my technical support, and I think one of the reasons why is because I sadly held on to them for earnings, thinking that the expectations were too low and that they could beat them. But having to adapt to that has been definitely a challenge, and one that I'm trying to keep more flexibility on. but at some point you just have to really understand if for instance the rotation into value never comes about. If I really start to see leaders like JP Morgan, Chevron, Exxon, UNH, just a lot of the value sector leaders start to crumble and collapse, I think that lowers odds so much for any type of rally that you can have. Because if you're right, the value sectors could go up 10, 15% in 2 weeks, like we saw in mid-April or mid-May, one of those 2 months. And so that's all you really need to time. I'm not thinking that these stocks are going to go up to all-time highs this year because there's significant risk, but I still think they're really low compared to where the strength of the economy is, just how much the Fed is willing to protect a lot of these underlying businesses and a lot of the risk associated. And I think, once again, yeah, they're just too low. And so I'm willing to be a little bit more flexible.
Okay, fair point. Just elaborate on some of your, cover parameters and, how you think about Tuesday. So I'm currently in a couple positions. I entered Intel like a week and a half ago or something. And for now, I think I entered at 51.4, somewhere right there. So I'm down a little bit, but with Intel, because it got sold off so aggressively, I'm kind of willing to give it a bit of a longer leash, over the next coming days, coming weeks. If I really start seeing it break down past, say 44, 45 or something, I might just cut it. But, with such a steep drop in Intel, and yes, I'm a big AMD fan, I just don't think that right away Intel should be dropped so much as a stock. So I will probably give it, another couple of weeks to show me strength. If not, I'll cut it. Now, when it comes to the positions that I just entered last week, so the one thing that I entered was beyond call option for some short dated calls. One of which was, I think, like August 7th. The other one was August 14th. And the other one was like end of August or something. We spoke about this, I think, Friday maybe. Beyond is going to be listed in Wawa stores, which are a big sort of chain on the East Coast, convenience stores, grocery chains. And I think that kind of flew under the radar. And on top of that, I was kind of seeing this technical structure of sort of like a falling wedge kind of thing. And, we're right under this middle Bollinger Band. So all I'm really hoping for is a pop to 131, 132, which could get rejected right here. But if that happens, that's a good 4 or 5% pop. My options might appreciate probably 40, 50, 60%. And I'm looking to get out, on that euphoria of options. But kind of like yourself, if I don't see strength by end of Monday, probably going to cut out those short dated options. I might leave the ones for the end of August. Pull the trigger on Microsoft as well. I saw some good buying activity happen right here. I'm still thinking that, especially companies like Microsoft, they may have a little bit more to go. I'm really, at present moment, like I've really cut out most of the noise of, thinking that the market is going to go down. And even though I don't want to be that kind of person where I ignore the reality of the situation, but I think the other side of the reality is also that the Fed has literally become, the buyer of last resort and the buyer of first resort in many cases. And, as obviously, as they always say, don't bet against the Fed, but this is like, don't bet against, God, basically, who's literally controlling the market like a puppet. Because, another thing that we saw, I think just last week, like Kodak, a company like freaking Kodak, that came out of nowhere, and all it really came down to, I don't know how true this is, all it really came down to was Kodak CEO or the company donating to the presidential campaign. And Kodak's a old, company that is pretty much gone away in 2010 because they failed to capture the digital age of photography, right? And now they're getting into pharmaceuticals. Like, what the hell? Their stock pumped up almost like 1,000+%. And so there's things like this that are still happening in the market, which makes me think that there is still that euphoria phase still left because people incessantly still think that stocks can go up and money is actually still coming to the market. So I cannot definitively say that this is the height of the top because though I do want to believe that there's a good amount of euphoria coming to the market, I don't think it's enough to say that and warrant that this is a top, especially knowing that the Fed is right there, as the market's sugar daddy to buy basically everything. So I want to talk about that a little bit more. Faisal is, first of all, um, the market being overextended. Are you kind of with the same train of thought? And the conflicting signals that we're seeing in the market, where consumers are thinking, for the months ahead, we might see lower stock prices, yet we still see, majority of retail being net long.
Yeah. I think that just speaks, especially the graph that you have up now, that speaks to a lot of the conflicting signals that I think investors have to deal with as far as, are we in a euphoric time or not? Because if you look at this chart, it kind of feels like if people are expecting stocks to come down, how can they be euphoric? But I think this is a case where people kind of say one thing and do something else with their money. They may say stock prices are going down, but they're not selling. I think, in fact,
Yeah.
they're ready to buy the dip just as soon as the market pulls back maybe 3 or 4%. I think it's natural for people to feel like this is the top. I think the mania and euphoria is a lot more identifiable because more people are on social media. You just can get a better sense of the mania itself, and I think that's directly related to social media and whether or not you connect with your friends more. People post just how much they've made on Facebook or something like that. I don't know. But the fear level is a lot more consistent even as stocks go up. But once again, I don't think people are selling. So in
Yeah.
my opinion, I think that's partially healthy when you have a mix of doubt and optimism. But then again, I don't know how much I trust the doubt part because, like I said, I just, even if the market drops 5%, are people thinking that this is going to be the pullback to take the market down to March lows? No, no one's thinking that. I think people, when they answer a survey like that, they kind of say to themselves, yeah, the market could drop, but I still am ready to buy at a moment's notice. And so I think that's more tailored to the euphoric feeling that I feel personally has just steeped into this market. And I think,
It
Kodak
see
is,
it. I was gonna say it definitely seems like um, people have sort of baked into their mind that all pullbacks will be bought and the market just goes up. I mean, you know, the kind of ridicule that you see um, towards the bears, it's like, how can you be so dumb to short the market, or how can you even say the market is overextended? And I think this is what really scares me, in my opinion.
yeah. And you're seeing it in a lot of these stocks and there's kind of this, like, I don't know. There was some weird stuff that has happened in the past couple of days. Like, look at Shopify. Shopify is one of the peak, I think, euphoric stocks, even though it had 100% year-over-year growth. Let me check what they're projected to do next year. From this year to next year, they're actually going to regress. My God, I just saw this. This was another stock. So they're going to make $2 this year. Okay, the stock is at, I'm talking yearly EPS. They're going to make $2. This stock is at $1,000. Next year, the estimates have them, at least from what I'm viewing on Investor Business Daily, they have them at $1.92. So they're
Oh
actually
wow.
coming down next year, and the stock continues to just trudge up. And I think the stock hasn't made a high since its earnings. Let me see. The high was on its earnings, and it's just continued to go down. I think Amazon also was another signal to me that tech was a little bit weak because I thought Amazon had the best earnings report and definitely gave the best growth trajectory out of any company that is reported in this quarter, like any company. And the stock didn't even see that much movement. It actually did not even. I think it opened up. It opened up at 1,000 or 3,244 and closed at 3,164. So, I mean, it actually was down maybe like 40, or I'm sorry, not 40 points, maybe like 70, 80 points from where it opened. And that type of weakness is not what you would expect. I know stocks like Apple, saw just tremendous buying towards the close, and I think that's because it's more of a popular retail stock. But Amazon is $3,000. I think there's a lot more institutional movement within that stock versus Apple or something like Microsoft. So I really paid attention to that, and I think it's a key signal that you know uh, these institutions may actually be starting to unload some of their bigger positions. But it's a small sign. This is I'm a guy who's short tech right now, so say what you want about that. But I just think there are definitely small signs. But if I start to see Amazon or Shopify firm up, then I think my mood will definitely change.
Okay. Well, I mean, let's dive a little bit further into some of these stocks that are doing particularly well. There's obviously other stocks on the side that smaller market caps, but a lot of euphoria, a lot of buying activity seen in Robinhood.
Yeah.
You were talking about Pinterest being one, right?
Yeah.
So yeah,
Pinterest, they
let's
had a
let's
good
talk about
quarter.
some of these stocks. From the perspective of, well, first of all, why is it that they're popping aggressively, and do you see real buying activity or real volume going into it, or do you think this is again one of those hot topic of the week in Robinhood?
No, I think Pinterest, it's surprising. Like, I didn't think they were going to be profitable anytime soon, but they're expected to be profitable in 2021. I wish they would grow revenues a little bit more this year, but I think next year they're starting to pick back up above 30%. So there's real momentum behind it, and the shift to shopping in a more digital, social way is what helped Facebook beat earnings because they reported really good numbers on their Instagram e-commerce side. So e-commerce, if you have some attachment to e-commerce, which Pinterest does, and I think they have a very interesting way of how they lay out everything, and the fact that now, when I remember when this product first came out, you weren't able to buy anything on there, but now when you see something you like, they have a very great way of setting up different things of putting content that you like for you to see, and you are able to buy that content through the screen. So I think there's runway in that. I don't know if it's going to compete with the likes of Instagram Marketplace, but I think Pinterest may be a buyout target for someone who's looking to get into like the social media e-commerce space. Like, I could see Amazon maybe buying them out or something just to build out that social gap. And also, if you need an e-commerce space, they have that e-commerce side, but I think Pinterest really adds that different level of social integration and being able to buy exactly what you like, what you see right in front of you. So I like Pinterest, but I'm still not buying it. I want to see how these stocks perform over the next week, 2 weeks. But another stock that was really interesting is Snap. And I remember Snap being a big loser for the longest time. And I don't know what the hell happened to this company. Yeah, did you know it's worth more than Twitter now?
I mean, yeah, I read that somewhere, but again, I was thinking about it from the perspective of how many people are using Snapchat versus Twitter now? Because I feel like this whole Snapchat movement, back from 2012 to 2014, dissipated a little bit more, and especially now that you have TikTok and Instagram becoming more famous. I mean, what good is Snapchat? You know?
Yeah, no, I'm definitely thinking about like shorting the stock. I just don't. First of all, you don't have the utility that like Twitter is trading at such an undervalued level, in my opinion, just because of its utility to people. And I think when you become a utility, they haven't figured it out yet, but I think people would pay for a subscription type service if it was cheap enough, maybe like $5 a month, because they just have that type of necessity power. And I think at some point Twitter will get their monetization right, but Snap, on the other hand, I mean, I've heard this augmented reality case that they're at the forefront of that. They have very interesting marketing ideas, I'll admit, but I don't know if it's long-term sustainable. Like, they're not even going to be close to profitable by 2021. Their quarter-over-quarter revenue growth has been declining for the past 4 quarters. It's like I just don't see why you would pay, once again, all-time high prices for a company that is just not, like, I don't know if there's anything truly unique about their product anymore. That's just my opinion. So Snap is one that I would definitely stay away from, period.
Yeah, I'm right there with you on that. On the flip side, I'm actually, very bullish on Twitter. I mean, I'm a huge Jack Dorsey fan, so I personally think that Twitter has massive upside left. And like you said, they just have to kind of figure out their footing of exactly how they want to pivot themselves over the next decade that we have. And from what I can tell, man, I mean, Twitter activity has gone up tremendously. So much conversation. I would say much better conversation to be had on Twitter, much better interactions than Facebook or Instagram or any other platform for that matter.
Yeah, I totally agree. Like the usability and the utility of it, and the ease of use. Like I think people would want to pay. Like I know it's kind of an outlandish idea because we've gotten this for free, and Facebook is free, and all these other social media platforms are free. But I think if Twitter came out and said we want users to pay like $3 a month, I don't think that would be the worst thing in the world. Like I think people would be inclined to pay for it. I mean, I think Twitter's strategy is let them build a connection, let them build a following, let all their friends come, and then it becomes a social necessity. And whether or not people want to pay for that, I think is I'm still unclear about it, but I'm willing to bet that the majority of people will because, like I said, it just has so much utility. But they got to do something. Like they got to not only, and it's not even only just about optimizing the monetization of your user base. Twitter is not really growing their user base as much as you would expect, especially when you have the president tweeting on there, making declarations on there. You would expect there to be like at least 600, 700 million people, and I think it stayed around 300 million for like years. And that's why the stock has really not done anything. If you're not going to grow your user base, then you got to be focused on optimizing monetization. And so far, they haven't come out with the best strategy. So there are just a couple of things that I wish they would do better, but I think it's just a wait and see type of stock. They'll get it right, I think.
Yeah. Are there any other companies that you want to talk about that are, sort of hot stocks right now?
I think I've been hearing a lot about Mercado Libre.
Oh
And
man, that's my neck of the woods here.
yeah, you probably know about this stock better than I do. I mean, they're not just e-commerce company. Like they have huge digital side. They're like a PayPal essentially. Like they have a huge digital payment structure that I think is gaining huge traction that they're trying to build out on. So they're a very broad and dynamic company. I think people like to refer to them as the Amazon of South America. I think they're beyond that. Like this stock exploding from 275 or whatever it was at the beginning of the year, 500, 580 to now 1,000 is totally justifiable. And I think the penetration rate is still like, and I actually want to ask you about that. How much do you think Mercado Libre has penetrated in terms of, people getting their goods online from them or from an online service like, how Americans get it from either Amazon or eBay?
You know, so I haven't quite used Mercado Libre. I've only heard about it from people here. Um, but you're right. I mean, I think the best way to define it is the Amazon of South America. And yes, they do have a lot of things that are working really well because they have basically full control over the South American continent, right?
Mm-hmm.
And they're doing a pretty phenomenal job. Um, I don't know though. I think Amazon, I think, has a lot more going for it in terms of, say, AWS and robotics, and of course the Amazon service itself, and then buying up Whole Foods, so you have a grocery chain. I don't know if we can compare Mercado Libre to be the vast sort of reach that Amazon has, but I think it has potential. I can see Mercado Libre stretching to the heights of Amazon in South America probably over the next 5 to 10 years. So yeah, I do think it has huge long-term potential, but kind of like all stocks right now, man, things are so overextended. Like Mercado Libre is up almost 200% from the bottom, of that March sell-off that we had. So it definitely kind of scares me a little bit that yes, I do believe in this company, but damn, do I want to pay, $1,020 or $1,124 for the stock, especially when I know that their own growth has slowed down. Their own sales have not been, the fastest growing, right? I mean, I think they are doing a pretty phenomenal job, by
Yeah,
the way.
they're doing pretty good. They're like upwards of 30%. They have been decelerating, but they're definitely upwards of 30%.
Okay, okay. Yeah, so, again, I think companies like this are great, but man, I think what concerns me is like how high, all the valuations are.
Yeah. No, and I think the e-commerce business, like even though it's really flashy, obviously everyone wants something that's e-commerce because no one can really go out and shop. It's really a tight margin business. Amazon managed to scale really well. It wasn't profitable for the longest time, and they had to become profitable by doing various metrics of things, and now they can just optimize their profitability by pretty much absorbing their own costs and making it a part of their own business. And I think that could be a model that MercadoLibre could end up following, especially if they grow out their payments. Like I think payments is probably one of the best businesses to be in, period, because it's, what is it, like a 95% margin business? I don't know how much PayPal has, but they have upwards of like 80-90% gross margins. And just like what AWS is to Amazon, I think Mercado Libre's payments side could be that type of growth factor that could help, give the capital and cash that it needs to grow out their e-commerce side to the point where it can be mostly profitable. They don't need to spend so much on operating costs, because you're exactly right. Mercado Libre is not that profitable of a company. They're only going to make like a buck. They're actually going to lose 80 cents this year and then only make a buck 30 next year. So the earnings growth is still a little bit slow. And I think that's exactly because operating costs are still too high. But once again, when you're building out these highly profitable sides of the business and not just totally relying on e-commerce, I see the growth runway is potential is just, I think it's limitless, as we've seen in Amazon. And I'm not going to say they have the same, they're going to be the same as Amazon, but they're definitely trying to diversify. And I think that's a very positive thing for a giant e-commerce business like Mercado Libre.
Yeah, definitely got it on my radar for sure.
Yeah.
And for our viewers watching, if you guys have any stocks that you want us to take a look at, make sure you leave us a comment below. Hit the thumbs up, hit subscribe if you like our content. Okay, there's also a Discord link below if y'all want to come join our free Discord community. Faisal and I have been crushing it in the equities markets and the crypto markets if you do trade crypto. So come join our Discord channel. Other than that, Faisal, I mean, I got nothing else to talk about. Do you?
Yeah, I got two stocks I want everyone to take a look at when they leave today, because I mentioned this stock on Monday, EverQuote, EVER, as a company that I was really looking to put a lot of money into because I felt like they were a huge disruptive force in the insurance space. And I remember talking about this company, I want to say 2-3 years ago. I think they primarily only did auto insurance, but now I checked out their website, they're very diversified and a much more broad company in terms of offering online insurance and matching people with like imagine them as a Trivago, but for insurance companies. So how Trivago kind of told you the best price for any type of airline, EverQuote will kind of tell you the best either insurance agent or insurance plan to go to, who's offering the best for your type of tailored information or whatever. So they've really broadened out. They're not just in auto insurance, they're in all types of insurance. And I was reading the transcript from the CEO, and they just painted such a good picture about just how much their business has actually been accelerated from this COVID-19 crisis. And I think as people are more inclined to stay at home and choose to save money on all areas in their life, including insurance, I think what the CEO said, they've seen a ton of traction as a result of that. And, I think that type of trend will continue. And at some point, it will end up being a very disruptive force in the insurance space where they may end up, coming in and having their own agents at some point. Now, I don't think that's in the plan, but I think they're growing at scale. They have no debt. They have just enormous gross margins. I think upwards of 95% I think 95% gross margins in their business. They don't need to spend that much on advertising because now insurance agents are coming to them saying we can't really advertise in our traditional manners because of how COVID is operating. So we're going towards you to help to optimize that. Like there's so many facets of this business that I think are being accelerated that are not talked about. And I said that the pullback that we got from, I think it was like 66 to 48 was like a gift from the gods. And I didn't end up personally investing in it because I wanted to see a little bit more traction after the quarter, which is coming up this week. But that stock ended up going up, 13.5, 14% this week. So I was pretty upset. But once again, I want everyone to take a look at this stock because they're going to report in a couple of days. And I think they're going to say some great stuff. I'm not going to play it for earnings, but I may end up buying the stock if they say similar things that what they said in their report back in April. So that's a stock to keep an eye out on for this week. And then another stock that I'm looking to get into for the long term is AeroVironment. It's like a defense company. They make a lot of.
What's the ticker?
AVAV. So they've kind of been in a long-term cup if you look at it from a weekly perspective. But I think this company is starting to get, I think it may be my number one defensive name as far as, the Northrop Grumman's, Lockheed Martin's, a lot of the ones that I've talked about, the big ones. I think this company should actually be at the forefront with Mercury Systems, which makes a lot of the AI drone systems. Those two are kind of in the category of their own because they're in a secular growth space within the defense sector that I think is, once again, AI technology, drone technology, I think is only going to be built out more so over the next coming years. So those two companies are at the forefront of growth in the defense space. And AeroVironment creates a lot of those types of surveillance, AI integrated products for the US government. That's their biggest customer. So they have not been doing so well because the sector has been doing pretty poorly, but their estimates look very good for 2021 and 2022 compared to the rest of the sector. And I think they're also getting into electric vehicle charging systems. So if the US government ever decides to implement a lot of electric vehicle usage or something like that, these companies are already working, or AVAV is already working with them and has built charging stations or specific charging stations for, I don't know, it could be for planes or different systems. That's what they've built out for these electric transportation vehicles, whether it's, like I said, planes. It's probably not planes, but could be, big Hummers or Humvees or something like that, whatever gets built out behind the scenes. So they're in that type of space, and I think that's a hot area to be in. So they have a little bit of growth in such a hot sector that I like to be in, which is electric cars, and I think we're going to continue to see more adoption as the years go on. So that's another stock I'm keeping an eye on, and I think people should also watch that as well.
Perfect. Awesome, Faisal. Well, thank you so much for your time, man. Good discussion as always. For those who are watching, again, if you want more detail from Faisal, he has more analysis in the equities trading side on the Advantage community. Again, the Advantage community is $97 per month, and we have equities analysis as well as crypto, so you can get all access for the price of one. All right. Until then, y'all take care. Have a good rest of your Sunday, and we'll see you next week.
Peace.